Welcome to Pipster. All right, today we're going to talk about something that can totally change the way you see the market. We're diving into a powerful technique, volume price analysis. We're going to decode how you can read what the market is really doing, not just what the price ticker is telling you. So let's get into it. So why does this all matter? Well, think about this number for a second. 97%. A staggering 97% of active day traders lose money over time. It's a really brutal statistic, and a huge reason so many people struggle is because they're missing half the story. This quote right here just gets right to the heart of it all. Price shows you what is happening, sure, but volume reveals the conviction, the real energy, the institutional money behind that move. It tells you how serious the market really is. Without it, you're basically flying blind. So here's our game plan. First, we'll nail down the basics of price and volume. Then we'll get into how this combo acts like a lie detector for the market. We'll learn the two most important signals to look for, cover the core principles you need to adopt, and wrap up with the right mindset for making this all work. Okay, first things first, the foundation. You know, most technical indicators that people use, like moving averages and stuff, they're all lagging. They're built on past prices, so they only tell you what's already happened. Price and volume are different. They're the only two true leading indicators, giving you real-time clues about what's probably going to happen next. Let's just break that down a little more. Price is the what. Is the market going up, down, or sideways? Simple. But volume is the why. It's the fuel that's powering the whole move. Is there a flood of interest, or is it just a tiny trickle? That is the critical context that most traders completely ignore. In fact, trading on price alone is kind of like watching a movie on mute. You can see the action, sure, but you're missing all the crucial context, the emotion, the intent behind it all. Volume is the soundtrack. It either confirms that what you're seeing is real, or it warns you that something just isn't right. So this brings up a really important question. If price can be misleading, how do we find the truth? Well, the answer is to use the market's own lie detector, volume price analysis, or VPA. At its core, VPA isn't about some crazy complex formula. It's really just the art of looking at price and volume together. You're essentially reading the live story of supply and demand, figuring out the psychology behind the price bars, and getting a feel for the market's next move. And the practical benefits here are just huge. VPA helps you filter out all that market noise so you can focus on what actually matters. It helps you see when the big institutions, the so-called smart money, are making their moves so you can trade with the trend, not against it. It can even expose fake-out moves, and all of this just builds genuine confidence in your trading. Most traders have a retail perspective. They only see the price on the surface, but VPA gives you the wholesaler perspective. You get to see what's happening below the surface, the big orders, the genuine institutional conviction. You start to think like the smart money does. So how does this lie detector actually work in practice? Well, it all really boils down to spotting one of two key signals, a confirmation or an anomaly. It's actually pretty simple. A confirmation is when price and volume agree. A breakout to a new high on a huge surge of volume that signals real buying interest. That's a confirmed move. But an anomaly, that's when they disagree. The price shoots up, but the volume is weak or fading away. That's a massive red flag. It's basically screaming that this could be a trap, a move with no real conviction behind it. Okay, so understanding these signals, that's the first step. But to apply them effectively, you really have to shift your mindset, and it's all guided by a few key principles. First off, patience. This is key. Market tops and bottoms don't just happen instantly. Culling compares it to rain clouds gathering before a storm. You have to wait for the evidence to build. Second, remember it's all relative. What's high volume for one stock at 10 a.m. is totally different for another at 3 p.m. You're always comparing the current volume to the recent average. And finally, practice. This isn't some plug-and-play indicator. It's a skill you develop by watching the market day after day. And that last point about practice is so crucial because it leads us to our final and maybe the most important takeaway about VPA. And this is it right here. VPA is not a rigid mechanical science. There's no magical indicator that's just going to spit out perfect buy and sell signals. It's an art. It's about interpretation, about nuance, and understanding the bigger picture. It's about developing a true feel for the market's rhythm and learning to listen to the story that price and volume are telling you together, moment by moment. That is where the real skill lies. So I'll just leave you with this one last thought. After everything we've talked about, it's pretty clear that the numbers on your screen are just raw data. The real edge, the advantage that actually lasts, comes from understanding the human story of fear and greed that they represent. So the real question is, are you reading the market story, or are you just looking at its numbers?